The economic implosion has begun. You're in it right now. It's happening right now. That's why people are talking on the news about this debt bomb that has been clearly growing for such a long time, and now all of a sudden it's a problem and people are noticing it. That's when it's too late. It is too late now. If you like these videos with no sponsorships and no advertisements, then please click like to help spread our message and empower our channel. Today we're talking about unemployment. We got to go into inflation. Then what happens is the recession plus the debt loads. We're talking GDP, stock market valuations, 4 different charts that I want to show you guys that indicate when a stock market is extremely overvalued. This all leads into what is going to be a massive record level of unbelievable. And it's important for me to say something here. This is a heavy topic. All the stuff we talk about is very heavy topics. And a lot of people say that's fear, uncertainty, and doubt. And other people say you're trying to sell books or you're just trying to get views. All of that, sure, maybe when I was a younger man, a young man's game, I now am using this digital soapbox to help as many people as I can, which is all the people that are about to have to suffer through the economy that we're about to be trying to survive through. And we can't help most people. We can't help even a small fraction of the people, but we can help some people. Please let me help you through this economic implosion. There's things you can do so that you land on your feet, help people that you care about, and emerge on the other side of this in a different situation than everybody around you. People are going to get wiped out by the surprising and looming economic train wreck. And you don't have to be one of them. You could actually profit and benefit from some of that commotion and chaos in the streets. So the official unemployment rate is 4.2%. Here's a chart of the unemployment rate, and you can see that the trend is up and to the right, up and to the right. And also we're walking into the biggest period of firings or reductions of available jobs because of artificial intelligence. And this is all during a time of a very sluggish economy. A lot of people are dealing with inflation and living off of credit cards. And this is during a time when there's so much tariff uncertainty. But my point being that the unemployment rate is almost certain to rise and it's extremely unlikely to decline. And as you'll see in just a second, unemployment will increase a lot when the recession starts. But first, we have to talk about inflation, which is at 2.7%. And there's a lot of massive forces pushing inflation down, which is the efficiencies from artificial intelligence, robotics, all these deflationary forces. Technologies are getting better and less expensive. But if you want the real inflation number, the way that they used to calculate it, you go to Shadow Stats, and they're saying that inflation rate right now is at 6%. And here's a chart of the inflation. You'll see that the real number is always greater than the numbers provided by the federal bodies. That difference represents the way that they manipulate the numbers they give you. Say, for example, they used to tell you that when prices increase a certain amount, that's inflation. And they say, okay, but let's not consider energy and food in that calculation because it's too volatile. And so then you get the new inflation number, which is better for the government. And then they look like the economy is strong. They gaslight you. They lie to you. You're told again and again on the media. They all agree, yeah, the economy is strong. And I told you the whole way that it wasn't. And I told you the whole way why it was happening. But now there's also a backlash against buying things from America. I told you about a bunch of the countries that were involved with that. There's a lot of them. This whole hashtag boycott Trump thing, where people are from the world over turning their backs on American goods because nobody likes the guy running the tourism is down, product purchases, services are down. The snowbirds are going from Canada down to Florida every winter. Lumber and coffee are both going to spike in price and decline dramatically in availability in America. And however you look at it, and the prices are already going up in things like coffee, seafood. And you're going to be looking at a situation right now where there's scarce goods, more and more scarce, and there's a lot more money sloshing around. And we'll get into how much more in a minute because it's going to be absolutely unbelievable. And this will all happen at a time when rates are getting lowered. What do I tell you about when recessions start? When the rates start dropping, the recession begins. Not everybody knows that. Economists don't know that. You can go up to an economist and debate them about this, and they'll argue that I'm wrong. But as these rates decline, the recession will begin. We're probably in it already. They backtrack it or backdate it anyways and say, okay, we told you there was 200,000 new jobs, but we meant to say that we lost 100,000. Sorry about it. So the recession will begin in whatever form, and whenever it begins, it begins. Don't worry about it. The date doesn't matter. But you also know that there's going to be a whole bunch of revisions down the road, and probability says now, the most likely scenario is that there will be revisions to the downside. In other words, you should expect the revisions and don't trust the number they give you in the first place, which is manipulated anyway. And federal debt came in at $37.23 trillion. We did it! Yay! Listen to this. The U.S. government has borrowed throughout its history to cover expenses when revenues fell short of spending. Yeah, no kidding. That was true 4 decades ago. Here's a screenshot for you showing the national debt. And now you're noticing it? You're coming late to the game, Sally Brown. And the GDP of America is a whopping $29.18 trillion. And here's a chart of the GDP with Japan and China in there too. I don't know if I trust these numbers. To a certain degree, the GDP is reflecting on military spending and federal workers, while it's also illustrating the decline of the dollar over that period. But here's what I wanted to get to for sure. These are 4 charts I put out in the insider exclusive only for people who are Peter Leeds insiders the other day. And it was 4 charts. I'll show you on screen. Each one of these is a very commonly followed indicator that a major stock market is strongly overvalued. And therefore, very likely, and generally what happens is that very likely to correct to fair value and even lower than that, like a pendulum. So here is the Buffett indicator, Tobit's Q ratio, that's my favorite one, the Shiller Cape ratio, and just to throw in here, I put simple price earnings for a 10-year average, all of them telling the exact same story. People argue stocks aren't overvalued because they could potentially go higher, just like in Venezuela. And I tell you, this bubble can quintuple in size. Don't worry about it. You don't go broke because somebody else makes 5 times their money on some BS situation. Ignore it. You just worry about what you hold and is it going to be there on the other side of this? And is the bubble going to go 5 times the value from here? Maybe, but I seriously doubt it. I believe it's going to pop in October, but I'm wrong 100% of the time. And as this bubble potentially pops while we're in the recession and the debt loads keep ballooning, and unemployment climbs while inflation spikes, is all going to lead us into a record amount of quantitative easing. Central banks are going to be buying financial assets like government bonds from the market to inject money into the economy and lower long-term interest rates. So they try to control the long-term interest rates, but it's artificial, the influence of that. So it's going to be temporary. As I tell you, if it's artificial, it's temporary. But they can directly control the short-term rates. So that's when you see Jerome Powell being bullied into lowering the rates, which he's going to do one time in September. And that's extremely bullish for gold prices. It's extremely detrimental to the value of the dollar. Everything bought with a dollar will cost more. Think of it like a soft devaluation. And this is just extending the slide of the dollar since January 1st. It's been going down stronger than ever. And now we're going to lower rates, so pushing the dollar even further into the dirt in this race to the bottom. So maybe you're a frog in a pot of water that is about to boil. But there's a big hope, I'll say it that way, of a gold revaluation. And I'm telling you again, that's just a US dollar devaluation. The gold revaluation to $20,000 an ounce is the same as saying this $100 bill that we have is now worth only $1. If you think it's appropriate for you, I'm not giving you any financial advice at all. You do what you want to do. I'll give you my opinions. My opinion is that you should go and buy as much physical silver as your spouse will allow you to today and hide it away and don't tell anybody about it, is my opinion. But besides that, there's also all these military events that are just going nuts around the world that people are not noticing because it's not on the news. I watch this stuff. You got to hunt for it to find all the information. It's not on the headlines anywhere. It's almost like there's a media blackout on even the appetite of people. They'd rather watch things about the Epstein files ad nauseum than find out how the Houthi rebels are literally dropping bombs on Israel right now. And they're getting through the Iron Dome defense system.
Direct attacks and counterattacks between Israel and the Houthis in Yemen. Since Israel's war in Gaza began last October, the Iran-aligned Houthis have regularly launched missiles and drones toward Israel while also targeting commercial shipping in the Red Sea.
The Houthis are dropping Chinese-made ordnance on Israel right now, and they even caused the port to shut down. And global shipping worldwide is still afflicted by the Houthis. They took out a couple of ships the other day, and no one's talking about it on the news. Make sure you watch some channels that talk about this stuff. It's so relevant, and it's all happening, and it's setting up as a massive war between America and China. They're clearing out everything between the two countries. We're talking about Syria, Iran, Afghanistan.
A major show of force in South America. At least 3 U.S. Navy destroyers, attack aircraft, amphibious landing vehicles, and more than 4,000 Marines.
But the point of all this, too, the stuff that doesn't matter as much as the real world implications, the price of oil will spike when any of these unintended consequences of potentially thousands happen. 2 airplanes clipped wings by accident. You never know what's going to happen that sets off or makes the war expand immediately in an instant. But when the price of oil goes up, oil is in everything. Plastics, stickers. That will only hasten the depths of the recession and will only hasten this massive economic implosion.
The Trump administration says it's meant to crack down on drug smuggling from the region to the U.S. and intimidate Venezuela's embattled leader, Nicolas Maduro, who has responded by calling up more than 4 million militiamen to defend against any possible U.S. aggression.
If you want my help navigating through this implosion as it happens and to know what to expect next and how to best position yourself for the most gains, then become a Peter Leeds Insider as low as $3 a month. And there's still always massive opportunities, especially during the chaos and commotion, which is why you're going to want to get involved with either the Peter Leeds app or the Peter Leeds world famous stock pick newsletter. It's one of the most popular financial publications of all time. If you like the fact that we don't have any sponsorships and we don't have any advertisements, you can thank the Peter Leeds Insiders. And you might want to consider becoming an insider yourself. I'm going to help all the insiders through this economic implosion that we're walking right into. And if you appreciate any of this content, please click the like button. It's a free way to show that you care and get our message out to a lot more people.